Brace yourself. The calm before the Federal Reserve's anticipated interest rate cut could be deceiving, with a turbulent market storm potentially brewing right after. This is the key insight from the latest movements in VIX futures, which serve as a barometer for expected volatility in the S&P 500 over the coming months. The VIX index, often dubbed Wall Street's fear gauge, is derived in real time from the prices of options on the S&P 500. It essentially measures how much investors expect the market to fluctuate, with higher readings signaling greater uncertainty and nervousness among traders. Here's where it gets particularly interesting and controversial. The gap between October's VIX futures contract and September's has widened dramatically, reaching a 2.2% premium, which is unusually high by historical standards. To put this into perspective, the September contract expires on the very day the Fed is scheduled to announce its decision, making it a critical marker for market sentiment. Meanwhile, the September contract itself is trading only slightly above the current cash index, suggesting that traders are relatively calm as the Fed meeting approaches. Greg Magadini, Director of Derivatives at Amber Data, a firm specializing in crypto derivatives analytics, explains this dynamic clearly. Cash is fair compared to September, but September is extremely low compared to October futures. In simpler terms, investors seem to be betting that the expected rate cut will keep markets stable in the short term. The Federal Reserve is widely expected to reduce its target interest rate by at least 25 basis points during the September 17 meeting, according to the CME Group's FedWatch tool. Some market participants are even bracing for a more aggressive 50 basis point cut. But, and this is the part most people miss, the October futures tell a different story. They imply that once the Fed's decision is out of the way and the rate cut is fully priced in, markets could face heightened volatility and possibly a downturn. Magadini warns, the VIX futures for September have priced away risk, while October could be ugly. A theme to keep in mind for risk assets, in my opinion. Historically, the VIX has shown a strong inverse relationship with stock prices. It tends to spike during bear markets or periods of stress and falls when markets are rallying. This means the anticipated volatility surge after the Fed's announcement could coincide with a decline in equity prices. What does this mean for Bitcoin? BTC has increasingly mirrored Wall Street's mood, so a spike in stock market volatility could quickly ripple into the cryptocurrency space, potentially triggering bearish price movements there as well. Since November of last year, the correlation between Bitcoin's spot price and its 30-day implied volatility indices has shifted to negative territory. Moreover, Bitcoin's volatility indices, BVIV and DVOL, have recently reached record-high correlations with the VIX, underscoring Bitcoin's growing synchronization with broader market volatility trends. This raises a provocative question. Is Bitcoin truly becoming just another risk asset, vulnerable to the same shocks as traditional markets? Or does it still hold unique qualities that could shield it from such turbulence? We'd love to hear your thoughts. Do you agree that Bitcoin's fate is now tightly linked to Wall Street swings? Or do you see it as a separate beast altogether? On a related note, Robinhood stock jumped 15% after the company was added to the S&P 500 index, effective September 22nd. Meanwhile, MicroStrategy, MSTR, saw a slight dip after being passed over for inclusion, despite meeting all eligibility criteria. Interestingly, neither Michael Saylor nor bullish analysts seemed fazed by this snub, highlighting the often unpredictable nature of index selections and market reactions. In summary, while the market appears calm as the Fed's rate cut approaches, the signals from VIX futures suggest that investors should prepare for potential turbulence once the decision is announced. Whether you're trading stocks, cryptocurrencies, or both, understanding these dynamics can help you navigate the uncertain waters ahead more confidently.